Okay, so welcome to, and I called it class in the thread in the group. I'm gonna moonwalk on that language. I want to call it a forum. Um, and I would that we will all be contributing to the forum, but I also recognize that we're all at different levels and we're all kind of doing different things. And so I'm happy to take up the mantle to sort of lead this forum. I'm recording it because as I shared before, I um, I didn't remember the last things we talked about before, and it's hard to keep up with that. So what I'm going to do is kind of record these sessions, give everybody an opportunity. And the second reason is because we can all go back and look at it, right? Which is not that different from the first one. And I do not want to be seen as a professional trader. I'm not selling securities. I do not have, I'm not registered with the FINRA or the Securities Exchange Commission, and I do not want this to be misconstrued as advice, financial advisory, right? What I want is for Black people to own the things they consume and own the things they produce and own where people want to live. And I think if we can do those three things, then we can put ourselves in a much better position for all the social things that we say we want, so social and politically. So that's the reason why I'm doing this and recording it, and I just think it'd be beneficial. I'm going to also put it on my YouTube channel, and that way, again, it can be shared in the group, and somebody who can't make it can come, but and watch it. And that way, I guess a fourth reason is that we can create value, because a lot of times people might not come because they feel like, oh, I don't know what's going on, I don't want to be embarrassed, or whatever. So if they watch it and they say, oh man, it's accessible or whatever, then that might make them want to join, because again, we need to be invested, right? um so and that's a long spiel. I'm still working on my deck, but I will also create a Dropbox for the group, and and I'll just make this deck a living document. So whatever we're going to discuss the next time, I'll try to prepare for it ahead of time, and finish it up after the call, and then it'll just keep growing. And that way, it'd be, I guess it could be a course for somebody that wants to watch the videos and follow and read the deck. So I'm freelancing here. I'm not charging anything because I don't believe that I'm in a position to be charging people for this information. But I don't think I'm that knowledgeable about it, but I've been doing this for like on and off for 20 years. And the reason I'm not rich is because of that phrase on and off, right? And just I have 7 things that I want to go over at some point that I'll add to the deck that I think I need to do to be independently wealthy using these skills. Um, and so I'll add it to the deck. I don't even think I'm going to bore you too with it, but um, I do think the number one thing is patience, um, and that's a big thing that I need to sort of work on. And I could have made a lot of money this past 2020 if I'd have been a little bit more patient. Um, and then discipline. You can't do this if you're not patient. You can't do this if you're not disciplined. Um, and for myself, organized, getting really organized. Having that system in place. Um, I think um, so. We have patience. What do I say? Patience, discipline, organization, consistency is a big one. Um, and you're gonna have to have, and it's something that's hard to do, a lot of forgiveness, because you're gonna make mistakes. You're gonna lose money. You have to be able to recover from that. Um, I think I have about 4 or 5 listed there so far. I'll write them all out in this deck. But those are those 4 are really, really important. Um, and I think they are important even outside of trading. So um, with that said, I'm going to move over to the deck, and I was only able to get through the moving averages, but we can talk about the other things that we're going to talk about as well. And Jamario, you seem to have some knowledge based
Yeah,
on what I seen you post in the group. So let's not make this a lecture, right? Let's make it a true forum. And I'm happy to another thing I did was I'm pulling everything from one source. So I'm not making up anything here.
yeah,
I'm going to Investopedia and getting definitions. That's I think we can't really have an effective discussion. It's like trying to have a discussion about anything with a 2-year-old, right? They don't have even the language to be able to tell you what's going on, right?
yeah.
So, so I think the first thing we need to do is really get some definitions down. I'm a math major, so that's where we start everything. So, like, what is the what are the terms that we need to use? What's the lexicon around trading? And I think some key things that I think I put in the group were 50-day, 200-day, just moving averages. Um, I was working on moving average envelopes, and I can continue to do that. And I'll let you two introduce yourselves, um, and and we can and I'll while y'all introducing yourself, I'll add some more to the deck. But I really want to talk about moving averages. I want to talk about support and resistance, and I want to talk about trends. So just basic conversation around trends. So uptrending, downtrending, sideways trending. We can take a look at what that looks like on some stocks that I pull, and just go from there. Is that cool?
Sound good to me.
Sounds good.
Cool. All right. So um Melita, you're a lady. Why don't you start and introduce yourself and what you do and why you're here?
Okay, hello, Jamario. My name is Melita Wright. I am a few things. I work full time. I'm actually growing a yoga business, and I have about this much knowledge of the stock market and the terms and things of that nature. So joining this call is more for me of being a sponge and also like writing down things that I want to actually research outside of the call to kind of help me be a little bit more knowledgeable. And I do some small investing in the stock market, based on things I consume personally. Like you buy a lot of Lululemon, so I naturally bought Lululemon stock. I consume a lot of things from Target, so I purchased Target stock. So that's one thing that I try to do is like, at least if I'm spending money at a place, at least try to purchase some of the stock to own some of it, if that's a good way to describe it. And also like understanding more about the stock market as well as like as it relates to like my 401k and like the way that it's being invested so that I can actually make some decisions on how I want to grow my portfolio. But I'm actually located in Washington, D.C. And
Okay.
that's a bit about me.
All right. All right. My name is Jamario Walker. I actually trade and invest for a living now. Started doing it
Mm,
for a living last year. Prior to that, I've been trading for about 4 to 5 years. Before that, investing for about 10. It's always been a dream of mine to find a way to live off my investments and to help others do the same. Um,
mm.
it's been a hard road getting to that point. Like
Can
you
you
touched
talk a
on
little bit about that
earlier.
hard road, Jamario,
Uh, in
if you don't
trading and
mind? If you don't
investing,
mind.
the key is you will learn from your losses. Every loss you go through, you have to make a habit of learning from that loss. Learn the lesson so you
Yeah,
don't do it again. Um, you will lose. It's part of the game. All investors lose. All traders lose. If
yeah.
you can build some consistency from those losses, um, build it on sound strategies, you can survive if you can last.
Mm-hmm.
I recommend finding a great mentor, someone that's done it, that does it, that you can learn from. My mentor is Oliver Velez. I've learned a lot from this guy. He's actually he coined the term swing trading.
Oh, really?
He coined that term swing trading.
How did
Um,
you get him to mentor you?
Just going through all the gurus on YouTube, just trying to find somebody that's doing what I want to do.
Mm-hmm.
Trial and error, and and by testing my own feet in the waters, by trading myself and getting burned.
Yeah.
Doing that, you will realize you need help. This is this is a profession. It's not just something you do on a whim. It's a profession, and you got to treat
Yeah.
it as such. You educate yourself by taking, courses if you want, but you have to educate yourself by actually getting into it and doing it. The best way to learn how to trade is by trading. Uh,
Facts.
Paper trading accounts can help as far as execution, but until you put on a trade and see your money go up and down, you can't feel that feeling, that fear of seeing everything go to zero. You
Yeah.
got to
Or
go
feeling
through
like it's going to zero. Yeah.
you got to go through that to become a master. You got to go through it.
For sure.
Um,
Yeah.
so I'm a living testimony of of fighting through it, of doing your own research, not depending on nobody else's research. Learning how to find companies on your own and just doing it on your own. I'm a proponent of that. What you see these guys on CNBC do, the research they do, and that they have access to, we have access to a lot of the same things. We don't have the capital they have, but we have access to the same stocks, a lot of the same research. It's just up to us to utilize that and to do it. And it's time for us as Black people to get our money to work for us.
Yeah.
This is one of the best ways to do that. Investing in the stock market, real estate, some of the best things we can do to set ourselves up, for the future. So I'm big on that. I thank you for creating this call so we can just get on here and share things and learn from each other. Um, and you talked about the moving averages. All pros utilize the moving averages, every one of them. You got to learn to read the candlesticks, the charts. I know we'll go through all of that, but that's essential. Learning how to read the chart patterns and find the support and resistance levels. If you can learn how to trade one stock, you can trade any stock. They all follow the
Facts.
same cycles up and
Facts.
down. It's the same cycle. Every asset follows that same cycle. So I'm just
Yeah.
excited about this, and let's learn and go together. Let's do it.
Man, I really appreciate your energy.
Yes.
Let's do
And,
it.
and I agree with you, Jamario. I definitely think that. So my father was an accountant and an economist, and one of the things he always talked about is, as Black people, we need to figure out how to generate wealth for ourselves and keep passing it along to like the generation after and keep the ball rolling. So that was something, and financial independence. Like he preached that day in and day out. So that's something that I definitely, that resonated with me, what you were sharing. That's something that I definitely am working towards, like not owing anyone anything and doing whatever I want with my money.
Yeah.
Yeah.
Yeah. All right. Well, I'm still like working on this slide deck, and it's important that I try to prepare before this hand. But I'm actually in the process of moving to DC as well, and so no excuses. But I'm mentally prepared, but I also know from the last discussion that um, because I know these things, it's hard to you have to break it up for people that don't know, and I never know who's coming. Right? People sign up and say they're coming, but then don't come, and then people that you know so I probably need to create an email list and use it that way, because sometimes people don't even see the post because Facebook and their algorithms, you know what I'm saying, are suppressing stuff. So all
So,
that said, go
so
ahead.
Thomas, I did want to tell you, I did take some notes from the last call. So I'll tell you a few key things that we did
The
talk
one thing I
about.
do know we talked about is Golden Cross and
Yes.
Death Cross. I remember
Talked
that.
about the Golden Cross and Death Cross. We talked about the P/L profit and loss. We talked about the PE ratio,
Mm.
like short sales,
So we
um,
did a lot of general conversation.
capitulation, Death
Okay.
Cross, the RSI.
Mm.
You guys talk about the MACD, moving average convergence divergence.
We should have. If we talked about RSI, we should have. We definitely talked about it because I showed them that on the chart.
Yeah, you
Yeah.
did.
Um,
And then,
but again, so Melita, let me.
sure.
So the key is here. Like I said last time, I was just like going over. I was looking at a chart and I was telling you everything that was on it.
Sure.
But I really feel that based on that conversation and just based on me thinking about how to best convey information to other people and what this looks like going forward, I felt that it's better to have it documented. And I like Jamario and another person on this call, in the group. His name is Skinner, John Skinner.
Mm-hmm.
We all had the same mentality. You can watch as many videos as you want. You can paper trade all you want. And I think we talked about paper trading last time, but until you put $100 in there and watch it go to 50, you can't simulate that emotion.
Yeah.
Right. And paper trading doesn't do it because at the end, it's not your money. So, and so there is a psychology to invest in. There's a good book, Jamario, I should be reading more of, called Investor's Quotient.
Okay.
It's old, but he talks a lot about, he's more of a commodities, he was a futures guy. But like you said, it doesn't matter what the asset class is. The only thing that really matters is understanding the techniques or whatever. But his premise is that there's basically um, only two emotions that run the market, and that's fear and greed.
That's it.
And so he builds his case around that, giving his own testimonials. And just listening to you, I know for sure that you have probably some of the same. So what are you invested in right now? As I buy a little time to get one more thing in this deck.
For me, I'm heavy tech. Because I invest for two other people also. One is in the healthcare and tech.
So are you a professional investor? You charge for that, or?
I charge off of the trading. I trade for those for my clients and also invest for them. I get a percentage of the trading profits.
Got you.
But that's how I do it.
And do you have to be registered with FINRA to do something like that?
You don't. I'm in the process of doing all that, but just open up a joint brokerage account where you're the primary and they're the secondary, and I manage all those accounts.
Oh, so let me ask you this. Let me ask you this. This is a good question. Do you, gosh, you threw me off with that right there because I ain't even. So do you have to have a Series 7 to do that?
You don't. I'm in the process of getting all that, like I said, but
because you have to be sponsored for that, right?
I will have all that. Right now, I'm just managing joint accounts with two individuals.
Gotcha.
You don't have to have a series certification to do that. All you need is a brokerage account.
Interesting. So you have a brokerage account. You mean by brokerage account, you mean just like with Ameritrade or somebody like that?
I use E-Trade.
You use E-Trade. Gotcha.
Yeah. And I'm managing those accounts for those guys, and I trade and invest for them.
Okay. Damn, that's what's up. I did not know you could do that.
Yeah, you can do it. I'm doing it.
I didn't know you could do it without having a Series 7, without being, registered with FINRA and all that.
So, I'm heavy tech focused in my personal portfolio. I come from a tech background, so I know tech more than anything else.
Right.
I love tech. I eat, breathe. I love all the companies in tech. So it's easy for me to follow those companies and find out who's doing what, who's lying, who's coming up with the best products. I know what they're doing. So I'm tech focused in that. Also, I love art. I love Kathy Wood. I love what she does. I've got a lot of money in her art, ARKK, ARKF funds. She's one of the best fund managers out there, man. She is killing the ETF manager. Kathy Wood. Gig. I like Kevin O'Leary. You may see him.
Oh my God. Tank. Yeah.
He's an abrasive guy, but this guy knows his stuff.
He knows money.
Finance. He loves money. He loves money. So I know he's going to stay on his team and get those guys straight. He's Gig Fund, OUSA. He got a lot of good funds he managed. So I've got some in him also. I like putting my money behind fund managers who I trust, who are transparent.
So you invest in actual funds, not individual stocks.
Individual stocks also, but ETFs.
Oh, gotcha. Also. So ETFs.
Apple's an individual stock. AMD is one of my favorite stocks of all time. I day trade and swing trade AMD. That's been.
Oh, really?
She's been my baby since high school, basically. Since like
wow.
my first share of AMD in college. first year of college. First
Oh,
step
so
into
you've
the
been
college.
on this. You've been on this then.
I have not, not like I am now, but I've been in it for a long time. It's
Mhm.
been my dream to do what I'm doing now for a long time.
You and me both, brother.
Yeah.
Because it gives you a lot of control over your life. Um, because you can live like you could take your salary becomes 100% portable.
Yeah.
So you could take your salary, your income, and move it to someplace of a lot lower income. Are you in the DC Metro,
I just
Jamario?
moved from DC in 2016. I'm in Georgia now. I'm back where I came from, back home now.
Oh, okay. So yeah. So again, that's an example, right? Now you can basically buy a mansion for what you're paying in rent. I'm sure if you're
Oh,
paying
oh yeah.
rent,
Yes.
Oh yeah. It's much easier down here, man.
but you didn't have to suffer the loss of income
Yeah.
necessarily. If you once you get yourself stable in the market, and that's essentially
All I
what
miss is the food. I miss the food up there in that area. The food and my friends, basically. No, DC's got everything.
fact.
Man.
Uh, so what
DC's
you're
got it
saying is
all.
you live in a food desert.
He's in a now he ain't in a food that he in a foodie desert. He ain't in no
Yeah,
food
food
desert.
desert. Yeah, yeah.
Yeah.
Yeah, yeah, that's what's up. So, Melita, what are you holding right now, if anything?
I have Verizon Wireless, Lululemon, Exxon,
Mm.
Get rid
uh,
of that Exxon.
Yeah,
Moderna.
yeah,
What do you say?
get rid of that
Well, yeah, I
one.
have like one share of it. I just,
All right, that's fine.
I just try to.
That's fine. That's
Okay,
fine.
so I have Verizon Wireless, Lululemon, JetBlue, BP, Exxon. What is this one? I don't even remember what this one was. Our APHA, which is Alfrea.
Alpha, yeah,
Afra. Yeah.
yeah. That's a weed stop.
Yeah.
That should be up right now. You should be up in that one right
Yeah.
now.
I've gained 82% since I bought it.
Do you like energy stock? That's a lot of energy names.
I don't know what I'm
What?
doing. So you know.
So one of the forms we gotta have is on like portfolio management.
I have Broadway Financial Corp. I think Thomas, you told me about them.
Oh
BY.
yeah, BYC. Yeah. How are they doing?
Um,
BYFC.
I've gained 13%. I bought it. I think it was $1.81 when I bought it. It's up to $2.05 now.
Okay.
JetBlue, I bought it $8.02 and it's up to $29.38 a share.
Okay.
Those are good moves.
Yeah, Lululemon, I bought it when it was $165 a share. It's $365 a share now. And Verizon Wireless, I bought at $57 and it's still at $57. So that's like with their 5G and all that type of stuff, it's just consistently. I consume Verizon Wireless, so that's why I thought it would be a good idea to purchase it. And
They have a dividend though.
they do.
That's a good thing. Yeah, so it's pretty
So does,
stable dividend.
so
So
does
does Exxon.
yeah, and Lululemon. In my other one, I have Moderna, Peloton, Nike, Apple, and I had McKesson, but I got rid of them. So, and then Teladoc Health. I have that.
All those are good names. I don't like the energy names, but the rest of those are real good.
Okay.
Exxon, but what did you have in energy besides Exxon?
BP.
Yeah.
Oh, yeah. Yeah, probably not that.
I buy those gases, so I'm like, let me buy stock in gas. I buy, and then
yeah. Well, one thing that can't happen if you got to think about. I mean, it can because they're going to figure it out too. But you got to think with Plug Power. I put the group onto that a while back, right? And
PLUG, right?
Yeah, and Tesla and all these things that are going up like that, like and Nikola and Neo and all these things, that we can't be investing in those things and have these fossil fuel companies
Sure.
go up as well. So, but they're going to figure that out too. They're not just going to go out of business because, you know what I'm saying? They're going to figure that out as well. But
Jamario, you mentioned ARKK, right? Yeah, that remember like Thomas, remember when we were talking the other day about stock? I mentioned ARKK.
You did.
ARKW.
Yeah. All of those ARC funds are phenomenal. Every last one of them, except for the Israel fund and 3D printing fund. The 3D printing fund isn't hot right now, but it will be in the future. But all of her funds are amazing.
Okay. Got it. Because I have it on my watch list. I was waiting for it to go down just a little bit, and then I wanted to buy some.
Yeah. You won't be sorry.
You
won't be sorry.
Okay, good to know. However, we are not trading or financial professionals. This is just like when I post a video and I teach a class, I'm like, I do not own the rights to this music. Like you have to.
Gotta throw that disclaimer in there now.
Yes.
Listen, man.
Okay, cool. Thanks for saying that because I actually put stuff on my watch list as I'm seeing stuff, and I am in information technology as well, like working in DoD, and I know a lot. You hear a lot that's going on, but you don't always know. So I'm thankful.
Okay, so what I'm gonna do is from here, I'm gonna share my screen.
This is fun.
Okay.
Yeah. Well, I want to get new information that you might not have known, but at least be able to add something to the conversation too.
Yeah, I agree. I fundamentally agree with that. Now, how do I get? Oh, there we go.
What y'all think about the digital currency?
I wish, of course I kick myself on a daily but I wish I had gotten in.
Like Bitcoin?
Yeah, Bitcoin.
Yeah.
It's like $83,000 or something. 38, 73, 60. It's moving.
It's approaching 40,000.
Yeah.
I hit 40,000 this past week. Can you tell me what you see?
We see a split screen, so we see the OIM, and then we see this says next slide.
Oh, I don't want you to see that. I want you to see the actual.
Just the PowerPoint?
Yeah.
Got it.
There we go. What about now?
Now it's just the PowerPoint.
Okay, cool.
That's a nice graphic.
Good.
Yeah, I'm trying to. It'll evolve. So, but thank you for that.
Ownership is a lifestyle. Yes. Oh, you know what, Thomas? While you're pulling that up, I did want to say one thing that you mentioned last call, and you said, and I quote, "You can own a business without doing the work to own it." End quote. That was one of the quotes that you said on the last call. That if you want to own businesses, but you may not want to have to go into the blood, sweat, and tears of starting it from the ground up. That with purchasing stocks and like investing in that way, you can be an owner of a business.
Yeah.
Yeah.
Yeah, for sure, and that's what investment is, right?
Mm-hmm.
It's becoming an owner without having to do the work, or the same work that there's work you got to be doing, like Jamario talked about with research and stuff like that. But other people are doing the labor, and so building wealth in this country and in the capitalistic world, global economy, it's fueled by capitalism. People who figuring out a way to get paid without the labor is how you create massive wealth. And it is the story of Black folks around the world and what forced free labor. So if you can do that, then you can do it. So anyway, I put this here, and this is just our beginning trader form, and this is evolving as far as a deck is concerned. But right now, we're just going to get into sort of swing trading versus day trading, a basic definition, and talk a little bit about that. So I pulled this directly from Investopedia. You see the source. No, you know, no funny business. It's really just me wanting to introduce y'all to some concepts. So swing trading. I'm not gonna read to you. Let's have a discussion around. I'm just not doing that. I refuse. So I'll make this available, and of course you can go to swing trading. Go to Investopedia and get it yourself. But the bottom line is, uh, so let's have a conversation around swing trading versus day trading because Jamario said he swing trades and day trades AMD. So tell us what that means for you.
AMD is my stock of choice because at least it's the semiconductor space. It's the most
Mm-hmm.
active semiconductor stock. It's been that way for almost a year now, at least.
Mm-hmm.
Um, it's also my favorite semiconductor stock, so it's natural for me to follow it and love it. But
Is it more active than Nvidia?
um, by volume it is.
Okay.
My Nvidia is much more expensive than AMD. But
Mm-hmm.
Nvidia can move more on a daily basis than AMD. It's a larger stock though. But I like AMD, man. It's very liquid. A lot of institutional support behind it. There's a lot of people, a lot of money in AMD. It's a great company. It's just easy for me to day trade it and to swing trade it. I watch it. I have a 5 minute chart, 10 minute chart, and a 2 minute chart that I use to day trade it.
Mm.
Um, I mainly utilize the 2 minute chart. It gives you more of a minute, 10 minute
Mm-hmm.
movements of it. But I do need the 5 and 10 to give me more of a outside gauge of the movements to follow the trends a little longer.
Yep.
Um, for swing trading, for all my trading, I use options. I don't do any straight assets. It's all options for me. Gives you a little bit more leverage over what you're trading. You got to know what you're doing, or you got to stop that trade when it goes against you. For me, my stop is 10%. If I'm losing 10% on the trade, I got to cut it if it's a day trade. For my swing trades, it's 50%. But you got to stick to those guidelines. When you
Mm-hmm.
start going against your guidelines, when you make a lot of mistakes. I've
Mm-hmm.
learned from my mistakes. If it goes against me 10% on a day trade, it's not gonna come back, and you got to learn to cut that and let that go. Um,
Cut your losses.
you got to learn that. You're gonna learn it the hard way, but you got to learn that. If you can't learn that, you can't trade. You won't survive.
You won't survive. You'll run out of money.
You won't. And it's just as clear as that. You won't. Learning how to stop your trade is the number one thing you got to learn to be a trader. You got to learn to stop them. For the swing trades, they can last from a couple of days to a week, like it says there. What I like to do is I follow the cycle of my asset, like AMD. Pull up my chart right quick. It's coming out of a flat base right now, and it's coming out of what I call an underwater state on the MACD. So it's a lot of
Mm-hmm.
buying pressure coming into it right now. If you can follow that cycle from the bottom of that buying pressure to the top of that peak, you
Man, you got some money. You made some
make
money.
a lot of money on that climb. And you can do the same thing when it reaches that peak to go back down because every asset's going to go up and down. It's going to run along that 20-period moving average and the 200-period moving average. It's going to keep doing that perpetually. If you can follow those cycles from the bottom to the top, you can do this forever. That's what
Yeah.
these traders do. They just follow the cycles of an asset that they're trading. I specialize in AMD. I trade it every day. I know AMD more than any other stock that's in my portfolio. Uh,
Okay.
all
All
of
right. So
the traders on Wall Street, the hedge fund, a lot of those major banks, they have people that specialize in trading one asset. That's an Apple
yeah.
trader, IBM trader, Microsoft trader. Those guys specialize. If you can specialize in trading an asset, you can do this forever.
That's actually a very interesting point. And he made a lot of great points. Um, so um
That's good advice.
to sum it up, I mean that's really good advice. Like you don't have to have like 30 different assets that you're trying to track, right? Um what I like to do from a swing trading, and I really try to stick to swing trading, but I have in the past couple weeks because of John been learning a little bit more about day trading, but I don't know options, so I use the straight asset the stocks because I don't want to be playing around with it if I don't know it yet. So I need to go learn it a little bit more and read up on it before I get really involved with options. But um, I do want to learn that. But swing trading, as you see here, and I'm not going to read to you, but it can last for 6 months. You know what I mean? Like you can hold something for 6 months like that. What he calls that underwater in the MACD, which we'll get to in another forum, because these technical indicators are really, really important. But that it's basically I can pull up. Let me see. Give me 1 second. Let me find my. Let me stop sharing this and go and share something else. And I know exactly what I got to do.
You can get lost in the indicators too, man, because it's
You
almost
can. It's the key is to find the indicators that work for you.
that's it. Find what speaks to you.
Yeah, with indicators for sure. Um, but since we're gonna talk about this anyway, why don't I bring this into the fold? Um, oh crap. Where are we?
I just
Yeah,
hate
here
that
we
we're
are.
just not learning this, man. When this field's been around about 30, 40 years, it's been around. But
Yeah, and I like I said, I have no excuse. I got onto it. I got out of college and undergrad in 2000, and um, you know, I had an opportunity at that time. We built a website, a tech startup, to track like 10,000 stocks and using these indicators or whatever. But I'm trying to pitch it to people my age. And I was like 21, 22 years old, and nobody was into it, right? But the internet itself was new, and all the tools that they have. Like my vision at that time was, I want to get stock market data on my cell phone, but nobody was doing that at that time. And I was able to send the information via email to the phone, but we never really got to where they are now, where you can trade directly from your phone. But I knew that was the future 20 years ago. And the key is just consistency. Like I thought I wanted to do it for a living. I loved it. But at the same time, I did not, nobody around me was doing it.
yeah,
And they'll start to tell you, man, you can't do it. It doesn't work, da da da. And then you start looking and like, well, how come there's people on TV, white guys on TV do it? You know what I'm saying? You're just trying to figure out why not me, right? And I don't know. I'm saying all that to say, um, this is a viable career if you um
like who's your trading mentor? Like who do you look up to as far as trading or learn the most from?
I have never ever had a trading mentor in
Man,
life. I read books, and I what my TV stays on CNBC. So I would say Jim Cramer more than anybody else. If I
Kramer's
had to have, you know, but if I had to just select somebody out of thin air, um, tell me what you see.
You see the chart.
You see the chart? That's why we on Zoom. We tried to do Google Meet last time, and it was not cooperating.
No.
Um, but so now Jamario hit the nail on the head, and because he used some terms that I understood, but I wasn't sure that Melita understood. I want to go into them. So he's talked about underwater. I believe this is what he meant
that's it.
when he said underwater,
That's it.
right? All these red valleys you see,
Mm-hmm.
right? What he's talking about doing is riding this red valley to this green peak.
It's beautiful.
It's beautiful. Isn't it beautiful? Don't it make your mouth water? Don't it make talk about food? This is food right here.
It's beautiful.
It's beautiful
Coming
right
up for
here.
air, right? When you ride
Yeah.
back up into the green.
So when I go on, so I want to put this in context. When I come on the thread in our group and I say, hey guys, here are my swing trades for January. And I pick CRM. I did not choose this one as a swing trade, but if you remember, I wanted to show this for a different reason, for trends, but this is slack. This is work. And but for the point I wanted to make, because of what Jamario just said, is this is beautiful. I mean, it's so beautiful. Look how smooth that curve is right there.
Mm-hmm.
I mean, spikes are hard. Spikes represent volatility. right? So you see how like how oh wow how steep that is.
Yeah.
That's volatile. It came right down and went back up. Which is great. Volatility is can be great if you use it for your good, right? You know what I mean? If you're on the wrong side of it, it can be really bad.
So let me
But
ask a question. So what you're showing, like if your cursor is right there at the very bottom in the water where that red peak down there, is that where you probably want to buy it?
Well, you don't want to buy
well,
it. You don't want to buy it until you get a green confirmation on the chart. You want to buy it once it starts to come back up, not when it's
Okay.
going down.
Okay.
yeah, we don't catch falling knives. I think we talked about that
Mhm.
last time. You don't want to catch a falling knife because you don't know. See, the thing is, you got to be really careful with. This is one thing you have to be careful with indicators,
Mhm.
and that is any idiot can take this picture and say, "Oh, well, you're supposed to buy right there,
Yeah.
right? Right? You're supposed to buy right there at 15.10." But here's the problem: if you're sitting here and it's to this day, you don't know, right? You don't know what the bottom is.
Mhm.
You have no idea where the floor is. You don't know, and it's particularly on
Oh,
day
so
trading or swing trading, you
abstract.
don't know where that is.
Yeah.
So what you have to do is now here's something that's really interesting. When it's really smooth like this is telling me that it's long. It's what the selling pressure is waning, right?
Mhm.
Eventually, this is when you start to want to look to get in, right? When you're starting to see it curve. And I have a math brain, so I I understand the calculus behind this. But if you just look at the picture, it's so smooth, right? That it's telling you that this thing is flattening out. This thing is telling you what Jamario is saying. You want to wait till you get a green confirmation. See these green arrows,
Yep.
right? It doesn't come when it got to 15.10. That's where it's pointing now.
Mhm.
But it didn't when it hit that price point, it didn't just pop up then. It popped up over here and says, okay, this is when it's this was the low. And what Jamario is saying is you really want to let that low be confirmed before you start diving in.
Sure.
Right? Now this is a year chart. This is a 52-week chart, but um I believe, yeah, this is a day for 52 weeks.
Mhm.
So, but these concepts, no matter what span of time, they persist, right? And so this is the Matt D histogram. We certainly talked about this last time,
Yeah.
but he pointed out a really interesting point. So this swing trade that we're talking about is this swing. What percentage of that swing can you get? You're almost never going to buy at the bottom, and you're almost never going to sell at the top, right? Jamaria, do you agree, or you am I lying?
Probably won't. You won't.
It's just really hard,
Get as
right?
close
Like
as you can, but you won't nail it. Get as close as you can though.
so if you just take a look at this, right? I don't know what this high is, but let's just say this high is $29, $30. Let's say that's the high is $30, right? That red arrow right there, right? And this is 15.10. So you're almost talking about a double, just about a double, right? From 15.10 to 29. The question is, what percentage of that can you get? If that's 100%, let's say it went up 100%. Let's just say it went from 15 to 30. You might not get it at 15, you might not sell it at 30, but if you bought it at 29 and you sold it at 30, you made some money,
Mhm.
right? If you bought it at 16 and sold it at 20 because you thought that was it, you made some money. The issue is what percentage of that are you getting? The indicators help you maximize gains and minimize losses. But again, fear and greed.
Yeah.
Yeah.
Fear and greed. So this picture represents the swings that we're talking about. If you remember, I posted in the group and I was like, I had a feeling this was going to happen. And the reason I felt that way is because if you look at it, just to kind of talk about sideways trends, this is not a debt yet. This stock hadn't moved. This is basically all of 2020. This stock is pretty much in the same place, except for this period right here. If you got to go back a couple months when I put it in the chat. But like, let's say this is like November. So from November of 19 to November of 2020, before that, it hadn't gone anywhere. It was pretty much flat the entire year. And I was like, how is that possible? Because we all working from home. Slack is a tool, and an extremely popular tool, particularly in the tech space and in private sector. They were using Slack. And I said, you know what? Microsoft Teams is presented such a formidable opponent to Slack that this is a problem. And I said, I bet you they're going to get bought. I was like, well, Microsoft ain't going to buy them because they got Teams now. Mm-hmm. So I couldn't think of who would do it. And one of the charts I want to show later is who bought them, which is Salesforce. And that's why you see this spike. Mm-hmm. Other than that, they were flat. And probably about a week before this happened, I was like, dang, I think they're going to get bought out. And I didn't do the research on it. And this is what Jamario is talking about. And we say, if you focus on one or just a few stocks and that's all you trade, you have the ability to take advantage of some major moves, because when you have those instincts, you're not worried about the other 10,000, 20,000 stocks they're trading every day. You're worried about these 1 to 5 or 10 stocks that's all you trade all day. And I'm still developing my group of stocks that I trade, because I want to have stocks. I don't short sell, Jamario, because I don't like the potential downside of it. I'm a little bit afraid of that. So I'm a long side trader, buy side. So I'm looking for stocks that do well. I want to have a portfolio that if these stocks are going down, I got 3 or 4 I can be looking at that will be going up in that kind of market. You know, that's kind of how I like to position myself. So I think we pretty much, day trading is basically, in my opinion, swing trading within the day.
That's it.
Mm-hmm. Right? There's a lot of words on this chart that you can read, but bottom line is, swing trading is a short term. You're not long-term investing. You're just buying the stock and trying to take advantage of the swing. What is the swing? We just showed you that. Okay. Well, those swings happen also intraday. And what Jamario does is he takes advantage of intraday swings in AMD, as well as weekly swings in AMD. All right. So I think we killed that horse after he was already dead.
It's okay.
So let's go to,
because I was going to ask that question, but you just answered it. Is that, could you possibly do swing trading within the day? And I think that you just confirmed that you can.
Well, good.
Yeah, thank you.
Good. I did something.
I wrote it down as a question without trying to interrupt while you were explaining.
Okay. So let's talk about the 50-day. Jamario, how do you use the 50-day?
I don't utilize it a whole lot. I really don't utilize it a whole lot. I use the 20 and the 200 mainly. To get a little closer, I use the 8 and the 13, but I don't use the 50 a whole lot.
Interesting.
Yeah, a lot of traders do. I don't.
Can you talk about, why? I'm not to justify, but just to explain your rationale.
Because I can get the same information from the 20 and the 200. It can give me the same information.
It's just more of a short term.
Yeah.
So part of it is because you really are. Do you have any long term holdings?
I do. I have a long term portfolio that I manage, but I day trade to fund that.
Got you.
Fund my long term portfolio. I do the same thing for my clients.
Mm-hmm. Oh, Jamario,
if you got a stock that's rising, if a stock is rising on the 20 and the 200, it's rising on the 50.
Yeah. So the good point about, so let me ask you this. This is a good point.
That was right there.
Right. But if the stock is rising, no matter what, that's the key. It's an average.
Yeah.
So in order for the average to increase, the price of the stock has to increase.
Yeah.
Right. And it doesn't matter the length of time. That's what he's saying, right? That your average is, and all the length of time, Melita, for your knowledge, do you understand the 20-day versus the 50-day versus the 8 to 13, the 100 and 200? Do you understand what that's doing? Just conceptually.
Conceptually, yes.
Okay, well, explain it to us.
Okay, so conceptually, what I understand that you're saying is like, so I think for the numbers, you're used to the 20-day, like on average, like how it's moving for the like 200-day, like how the like that number. I think it's the number is based on the number of days, like overall. So if it's 20 days, you're gonna see over the next 20 days, like how the what is it called? The dollar average,
Average
small moving
price.
average
Yeah.
has moved, and then for like 200, it's the same. So
Mm-hmm.
that's kind of what I understand it to be.
Yeah, that's pretty
Okay,
good. That's pretty
conceptually.
good.
Okay.
So, yeah, so if you think of it, 200 is pretty much a trading year.
Mm-hmm.
It's pretty close to a trading year. It's
Sure.
about 200 days in any given trading year. It's over 200, but it's close to it. So
And
a
then
lot of times you'll see a stock and they won't show the 200-day moving average, and that's because it hasn't been trading for a whole year yet,
sure. And
right?
if you're making a decision based on something that you're going to do short term, like a swing trade with, like, say you're doing a swing trade within the day, it's cool to look at the 200, but it's like what Jamario was saying. He's saying that it's good to look at 20 because it'll give you kind of a quick snapshot of for the last 20 days how it's performed, so that you can make that split the second decision, and then also look at the 200 day, which is also going to tell you like for the last trading year what it's done.
Yeah.
Am I tracking?
Yeah.
Okay.
You got it.
I'm a little mathy too. A little bit.
So, the one of the reasons why I brought the 50-day and the 200 is because there's a real for a long-term trends, like if you wanted to hold something for a few months or whatever, because obviously 200 days and 50 days is 50 days is about 2.5 months of trading.
Yeah.
Um, and of course 200 days is like a year, so almost a year. Um, maybe a little under a year. I need to think about that. But like the point is, um, the 50-day when this is something we talked about last time. We have a golden cross and we have a death cross, and that 50-day moving average, when it crosses above the 200-day, that's considered a golden cross, and that's a big deal in trading, particularly for longer swings, larger price movements. You know what I mean? Um, and of course, when the 50-day crosses below the 200-day moving average, that's a death cross, and that's indicating that price is trending downward, and it could be a larger move downward. So, um, so those are just some things to be looking for as you're looking at chart patterns and stuff like that. And those are super, super popular. But all of the others have their own use as well. But I just wanted to cover it. And the good news is we pretty much covered this next one as well. We got it. So I use envelopes because that's what I started on. And I really like it just to give me some insight. And I'm gonna show you why I personally like it real fast. Um, Give me one
Never
second.
heard of the moving average envelope. I gotta see what this is.
It has its downsides, but I started with it, and I really I just got used to it. So everybody got their own system.
Yeah.
Uh and this helps me, but I'm gonna show you why I like it right now. Uh, so tell me what you see, so I'll make sure we're seeing.
We see the chart.
Okay, good. It's CRM2.
Yeah, it
Yeah.
is.
Okay, so the reason why I like these envelopes are these sort of purple lines here. Those and you can control them. You can edit your study to show like they can be a percentage above the stock and a percentage below. I think this is the default with 0 percentages. It's just being calculated based on the number of days, which I believe is 20. So just a 20-day moving average. But the reason why Jamario has given us a lot of insight into these swings, right? These MACD, it's underwater MACD, he calls it.
Water.
So CRM is slack.
Mm-hmm.
And if you notice, when they bought, this is the same, I paired them together with work, or CRM is not slack. CRM is Salesforce, excuse me. Work is slack. And so I paired those two together because you can see CRM purchase slack, and you can see the price moving in one versus the price moving in the other, right? So right around the time they purchased slack, their stock dropped because people couldn't really figure out why they did that. They didn't understand that strategically how it's going to work, and so it really hasn't recovered from that. And the same way, if you remember, Slack was kind of went all the way up and just kind of traded sideways. This dropped and it's been trading sideways. If you look though, right now it's right here. Like, I try to find areas of support, and this is where we get into support and resistance, right? Which is where we'll kind of stop for the day. So, um, it when a stock starts to drop, and we talked about when it starts to get down here, and Jamario, I like it, he calls it underwater. Right, when a stock is, this MACD is underwater, the stock is looking for area of support. In other words, it's looking for areas where the buyers are going to come in, and it could be technical support, it could be they came down to a moving average, or it came down to a low, a recent low or recent high, right? So there's no um, singular definition or singular number for support in any security, right? It's just it's found its footing, right? Imagine if you were falling and you were just trying to reach out and grab something to hold yourself up, right? So the stock price is dropping, and all it's trying to do is find an area where buyers will now enter, because at some point, um, right? And I think we talked a little bit about this last time, because at some point I said, imagine, like, nobody wants to go on a cruise because of COVID, right?
Mm-hmm.
Nobody wants anything to do with it or whatever. And I think we talked about nobody has anywhere to go, because we all, those of us who thankfully are blessed enough to have a job, we can work from home or anywhere. We don't need to buy clothes, because we just pretty much rocking whatever, whatever, say anything every day, right? You know what I'm saying? Yeah. So what difference does it make? But there is a point where we believe that we're going to be able to go outside again. And when we're able to go outside again, we're not gonna wear the same thing every day, right? We're not gonna wear the same three things. So there is a price point where you don't need to buy clothes right now, but there's a price point where they can make clothes so cheap that things that you would wear, that you will buy them and hold them for a better day, right? Mm-hmm. Right? I can sell you a pair of jeans for or chinos for $15. You're like, man, look, you know what I'm saying? I'll pay it. I don't even know if I'm gonna be able to fit them by the time I can go outside again, right? But I'm going to buy them because the value of it I perceive to be greater than what the price is today. And that's the difference between price and value. And so what particularly like value investors are looking for is inexpensive stocks that whose price is below the actual value of the underlying company. Mm-hmm. Right? And so when stocks are trying to find support, where's that point where people who institutional money, or people who really know, or not, people like Jamario who only looking at that stock, if AMD starts to sell off, somebody like Jamario gonna say, wait a minute, I know that this is worth more than that. They got all this stuff going on. I gotta buy, even though everybody else is selling. When enough people start doing that, the stock starts to find support, and that's why you get that smooth curve that we start to see. People just, all the selling pressure is gone. People that were shorting it, maybe they're covering, whatever the case may be. But when that happens, the stock has found support. And if you notice, I don't know if I need to blow this up, but if you notice, it's found support right around the $220 level. It's been trading here for about 2 months almost. That's support, right? It doesn't mean that when you buy support the next day or next week it's going to go up, but it does mean that you probably found something close to the bottom, right? You found an area. It's an area of support, right? Right. It's not like a specific number, a price. So this area right here, and if you notice, this moving average channel is has come down and it's hanging on to it for dear life. I like to use price bars. Some people use candlesticks. I don't know that there's really that much of a difference, but the bottom line is you get the same trends with each one. I like this because in an uptrend, in an when a stock is clearly uptrending like this bottom envelope tends to act like support. So you can tend to buy, particularly if you got the percentages right. You can strong uptrends. I mean, if I can find Square, Square would be a really good one. Let me see if I can find Square. That will help you. But I wanted to show you this because it's hanging right here, and you can make money in and out of this channel short term, right? Like I can buy here and sell here over and over and over. Look at this. If you buy here and sell here, buy here, sell here, you made money several times over, right? Just buying in the bottom of the envelope, selling at the top, right? So there's a lot of opportunity just within those short-term price movements. So that's another reason I like to use it just for that purpose. Let me see if I have Square.
I can see the merit in it.
Yeah. So it's not nothing that I'm not waving my flag that everybody needs to do because it has some downsides, but it's just something. It's where I started and I learned it really well. So, um, so I guess to wrap up, like, because I don't really have any more slides, and we kind of went over some basic. Maybe tell me your definition of uptrending, Jamario. When you define, particularly since you do short term trading, what's uptrending for you? And maybe I can find something on that.
What I try to look for, institutional buying. I look for larger candlestick
How do you
bars.
know where? How do you know when that's happening?
It's utilized. It's usually a larger bar than the preceding bars, a larger green bar on the chart, or a
Mm-hmm.
larger red bar on the chart.
Mm-hmm.
Um, I utilize the Hakinashi candlestick chart and the regular candlestick chart.
Okay.
Um, I mean, that's what I hunt for. I hunt for those big elephant bars, what we call them. We call them elephant bars. You just hunt for an elephant bar that's coming out of a narrow range, and that is a
And
good
that lets you know that people are piling in.
that lets you know that money's coming into it. And if
Do,
it's
do
the
you use the
upside,
Chaikin money flow?
I don't. I just utilize the volume, MACD, and the moving averages.
So actually, I'm gonna show you this real fast then because what you just said is a really great point. I can go back to one of my.
Because that's what causes those massive bars you see on the chart. That's institutional buying and institutional
Mm-hmm.
selling, not regular people like us. That's not us
Yeah.
making those moves.
No, we don't make stock prices move.
Nah,
We don't do that, right? We take advantage of movements.
that's it.
Right.
So you see Slack, this is work, ticker symbol work. Okay. So this is the Chaikin money flow,
Okay.
right? It's an oscillator. And all it's doing is very similar to the MACD. It's a histogram, obviously. But what it's doing is it's telling you that at this moment, money is flowing out.
Okay.
So below the bar, it's underwater, money's flowing out of a stock of security you're holding. And when it comes above it, it's flowing into. And so, or to get it back above it, money has to flow into it. So in order for this MACD to eventually get above water, money's gonna have to flow into this asset. They work together. So basically, the MACD goes above this because this happened. Right here, this spike happened because this spike happened. So I don't want to get into too many of the technical indicators on this call, but because he mentioned that money flow and institutional investment, this basically was an institutional investment made by Salesforce. and then you know what I'm saying, just make the price go up, right? So so
So what I'm
that's
hearing,
what.
so what I'm hearing
Go
you
ahead.
say is that institutionally, the big people that are spending money, they may be like shareholders, they may be like the CEO, they may be someone that's within the organization that's funneling money into the stock to help increase the
More that, or it could be truly an institution like
Yeah.
Bridgewater or a
okay,
fund, right? Like
okay.
somebody initiating coverage on it and just deciding that they're going to invest in this,
Sure.
you know,
Okay. And
asset.
would that also include like on the when you look at the detailed quote of a stock where it says held by institution, would that
Yeah.
percentage be really important to know? Because
Oh
like
yeah.
we're
Yeah,
86% is held by the institution.
Oh yeah. You want
Yeah.
something
that's
that the institutions own. But the institutions own the best companies. They're not going to own trash. So if they own it,
Got it.
right.
percentages, it's a quality company.
Got it. Okay. So would it be safe to say, in your opinion, anything under what percentage would be like, well, or is it hard to say?
That's hard to say because it changes by sector.
Sure.
It's kind
Okay.
of hard to say. You got to research a couple of stocks in that particular sector to see the average amongst all of them.
Got it. Okay.
Hmm.
That's
That's a
something
And then
hard.
you can find the best.
That's something Thomas mentioned last call too. You know, to understand investing in a stock and also understanding like how a competitor or a company that's doing something similar or in the same field is doing to kind of decide where you want to invest as well.
Yeah.
Okay.
Yeah. Okay, so let's talk about let's kind of recap and talk about maybe what we want to discuss next time. Does anybody have anything that they want to bring to the table to discuss it next time? Um,
Something I
any
thought
thoughts?
is as a person that does not do this consistently on like a daily basis or is not like as active in it as like say Jamario or you, Thomas, maybe it would be helpful if people that join the calls would have homework, or we would actually go into and find a stock and maybe do the homework on, hey, we saw these three stocks. I know you said that look at this stock, but this is actually like what I learned about it based on what you shared and the why behind it. Because then it's not only you told me, I've not just seen it, but now I'm also conceptualizing it so that it can make sense to me as the person that's trying to do it as well. So like how you might have a different way and Jamario might have a different way, but it will kind of like resonate more with the person that's getting the information. How do you feel about
Yeah, I feel that's great. Only thing I would change is that
that?
I would prefer that we take the information that we get out of this to go find your own stock or to stocks that you already have,
Mhm.
rather than waiting for someone to give you and tell you about it. I think you start out, a lot of people start out by saying, oh, have you heard about Neo? You know what I mean? And maybe, you go and look at it and like, oh my God, it's gone from 4 to 12. Let me buy it. You know what I'm saying? And you don't have any reasoning for why you're buying it. So if the price fluctuates, you don't know whether to
Right.
hold it or not, right? And
Right.
that can happen to any of us. It happened to me. I bought Neo at like 12 something and got rid of it. You know what I mean? Right? You know what I'm saying? Because I didn't understand, like Jamario saying, look, if you know everything, he understands everything that's going on with AMD, you can hold it for long term, you can swing trade it, and you can day trade it because you kind of know about it.
Yep.
Um,
Sure.
and
Well,
so
yeah, and then like
yeah,
kind of
so
coming to like
use what we talk about to go find it yourself. We're trying to train each. I want everybody to build their ability to hunt.
Yeah.
You know what I mean? Like,
man of
so
this.
that in order for this to be a good form and valuable for everybody,
Yep.
we need hunters.
I
Mm-hmm.
like that.
You know what I mean? To go out and say, man, this is an opportunity and this is what I know about it. But we can't, we all kind of have to be speaking the same language before we can get to that point.
Sure.
You know
Sure.
what I mean?
I like that.
And like a really cool challenge I just thought of too, because you asked for suggestions, is like I think when I mentioned earlier, like, hey, I bought Lululemon stock because it's
Mm-hmm.
something that I consume a lot on a
Mm-hmm.
regular basis. Like it's something that I know for the last 2 years, I've spent thousands of dollars buying stuff from them, mats, clothes, everything you can think of. So I'm like, you know what? Like, instead of me just continuing to spill money out from my pocket through my business, let me also personally own some of the company. So then it's also like, you know, doing the research as to why you're buying it, but it also ties into the OIM, you know, concept of own what you consume, own where you live, and what was the third thing
Own
for
what you
OIM?
produce.
Own,
Right.
own what
So
you produce. Right.
so
So it kind
basically,
of
you
ties
can't own a business and everything you consume. Right. You know what I'm saying? It's not possible
in. Yeah.
unless you're investing.
Right.
Right. In other, and actually, let me change my language. You can't start a business and everything you consume. Right. But you can own a business and everything you consume by investing. Right. So basically, invest money. Right. Invest money in the things that you think are valuable because you're buying them. Right. And the lesson I learned in that was when the economic downturn for the housing crisis happened, I was banking with Bank of America, driving a Ford, right? And didn't invest in either one of them. Knowing good and well I was going to keep putting money in the bank every month, and I was going to keep paying my car note.
Yeah.
Right? So why didn't I own those assets? If I did, I'd have probably quadrupled my money.
Sure.
Right? You know, easily, not probably. It's
Oh,
Bank of
yeah.
America was at $2.50 right?
Wait.
So, right,
Yeah.
you know. So what I'm saying is, own. It's just a habit. It's a lifestyle, right? Ownership is a lifestyle, and we have to retrain our minds around that lifestyle. So what you produce is, if you're really good at something, start a business in it. You know what I'm saying? You don't have to work for somebody else forever. You know it. You learn this industry in and out. Okay, then can I take this and start a business in it? And that's kind of what own what you produce is. And then you may not want to own where you live, but I do think we need to own where people want to live. You know what I mean? Because there's different schools of thought on whether or not you should own your house you live in, but and both have merit. But if you have some real estate, that's people got to live somewhere. So if you have some access to real estate and own it, and from ownership perspective, I think that's good. So those are the three things where I think we need to get really focused on ASAP. Jamario, you got any thoughts whether we should, anything you want to bring to the table next time?
Um, I mean, just whatever you guys need, man. I'm just here to learn from you guys, to share what I can, and just grow together, Um,
Sure.
I'm big on specialization though, specializing into a specific sector or stocks. I'm
Yep.
big on that, so I can really speak on that and how that has helped me instead of just jumping around for the hottest thing. A lot of traders jump for the hottest thing. What's moving this week? What's moving this week? Instead of just focusing on a sector that they know that they're good at, and just
Mm-hmm.
really fishing in that sector. I'm big on that.
Okay, I see that. And how about this as a challenge? Um, can you bring to the forum next time, like, just some information on how you got to that point and why and what and the benefits that it has
I
for
can.
specialization? Because somebody might have an argument that, hey, what happens when I don't know when tech isn't hot, because how is tech not gonna be hot? But like, you know what I'm saying?
When
But
it's
like,
not hot, when it's not hot, you short
yeah, okay. So tell me this. So then I'm glad you said that. All right.
it.
So then I personally just don't do it. And in the last call I asked that they not do it, and I didn't want them to talk about day trading because most people don't have enough skills yet to be day trading and doing high
Yeah,
volatility stuff, right? Day trading, you got to be, and if you got a day job, you need to be focused on that. And day trading, you got to watch. You know what I'm saying? Like,
yeah.
you got to have. You can set your parameters, your sub parameters or whatever, but anything can happen, and they can go through those parameters. So,
Yeah.
so particularly on the downside, that's bad. Upside, great, but on the downside, not so much. I also said that the group didn't feel as mature enough to do short sales because the stock, if you buy a stock long, the theory, in practice, the lowest it can go is zero,
Yeah.
right? But if you short a stock, like somebody, I remember a guy said he was going to short a stock. I think it was um Tesla. It was in one of my investment group. He was shorting Tesla before the big move last year, And he was like, man, I'm telling you, this is it. It's overpriced, whatever. And I'm like, okay, good luck with that. I'm not shorting it.
No.
And I don't think he made any money off of that, right? You know what I'm saying? So he definitely got squeezed at some point. And but so since I have no expertise in it, no experience in it, it'd be great for somebody to bring a counter argument to why you can make. I know you can make money doing it. So how do we make money doing that?
What I would say is I would do it with options, not straight stock. You buy a
Okay.
call or you can buy a put. That way all you
Sure.
can lose is what you spent for that call or that put. You buy a call for to benefit off a rise, and you buy the put to benefit off a fall. But the
Facts.
only loss is how much you paid for that call or that put. So that way you're not tied to that unlimited shorting risk because you buy options. That's the best way to do it. That's how I do it. I
So
wouldn't.
are all your holdings options, or some of them
All my
actual
holdings
stock?
are stock, but I trade options. All I trade is options.
Got you. So
But I
your
hold
holdings are stock and you trade options. Got
trade
you.
options. You could hold like she has Lululemon. Lululemon is an amazing company. I would hold that company that I would trade against up and down the chart. But hold it forever. You should never sell. It's a great company. Never sell all of Lululemon. Keep that. Trade it. Trade against it. Up and down the chart.
I like that. I like that. That's a great lesson.
Yeah.
I think we can end there. So yeah, maybe next time bring some of your experiences with doing exactly that, holding stocks and trading options against it up and down.
Yeah.
And maybe that would be of value. And I will, continue to look for things I can bring of value as well. Some of these indicators, I want to go over some more of these indicators. If you have indicators that you use, can you throw them in the group chat when I'm gonna post about this when I put this on YouTube or whatever, just so we can keep the conversation going online in between the month, because it's kind of hard if we don't.
Yep.
Yeah, I got you.
You know what I'm saying? So anyway, any final thoughts before I close?
Thank you for organizing. That's all I got to say.
No worries. It was valuable. Are you finding it valuable? You know what I'm saying? I always want to create value. Is it, Jamario, for somebody like you who has a lot of experience, is something like this even valuable?
I'm still learning, man. we in this together.
In a sponge, right? And squeeze out what you don't need, right?
That's it.
All right, y'all. Well,
Thomas.
Thank you, and I'll continue to work on it.
Okay.
All right, y'all. To the next time.
All right. Have a great day. Nice to meet you.
Y'all too.
All right, peace.
Later.
Bye-bye.